So we now, okay. Welcome to a real estate podcast. We now have Trevor Cowley entering the room. What an honor. What an honor. This is crazy. What's going on? What's going on?
What up, man?
How you feeling?
How you doing?
Am I loving it here, man? Definitely.
You loving the hair, you said?
Loving the hair, loving the hair.
Fresh cut yesterday. So within 24 hours. Thanks. I appreciate it. How you doing?
I'm all right, man. I tried. I was too busy yesterday. I was trying to get a haircut last night. Couldn't do it. Woke up this morning and was like, you know what? Let me just come straight to the office and knock this out, man. That's dope.
Yeah, I feel that. Trevor's walking in right now. He had to go get some water. So
Nah, it's cool. It's cool. It's cool. How you feeling so far?
so far so good, man.
Mm-hmm. Ready for 2020? Trev, what's going on?
Let's see if I can open this up. Let's see. Here we go. What's good, man? How you doing?
I'm all right. How you feeling?
Good, man. Good.
Dope. Ready for 2021?
I don't know. I think I don't know if anybody is, man. We don't even know what we're ready for, you know. I guess if you stay ready, you don't got to get ready.
Don't got to get ready.
Mm-hmm. That's what it's about. So just stay ready for whatever. You know, there's going to be new challenges, new obstacles, but that's just like any other year. So it's just about controlling what you can control and making the best of it. So
most definitely. Well, listen, I appreciate you guys coming on. I appreciate the time. I know you guys are super busy, and it's definitely appreciated. I don't want you guys to think I take this for granted at all. Like, this is truly an honor. Definitely. Been listening to the podcast on Spotify. Found you guys on Instagram, and every time I feel like, damn, I don't want to get up and go to the office. For some reason, the algorithm just picks up, and I see
picks up your vibrations. Is like, oh shit, Chris needs to see something right now.
Yeah, Chris, you got to get up.
It's called "Get Your Ass Up" algorithm.
Definitely.
Yeah,
definitely.
In your favor instead of trying to sell you something that's making you get up.
Yeah,
most definitely gets my ass up, because I'll be like, oh man, and then it's like, nah, Trevor's gonna get mad, and what will go, and like, definitely, I appreciate you guys for that.
Yeah, no, it's good to see that people are vibing with the information and actually taking the information seriously and trying to apply it. You should feel guilty a little bit inside if you're not doing some of the things that deep down you should be doing. Like getting out of bed. The bed's super comfy and it's loud as hell. It says stay with me. So it's just a matter of ignoring all the comforts and getting out of bed and doing whatever you need to do anyway. So I appreciate you, supporting the page and the podcast and actually applying information. That's really what it's about.
No, I appreciate it. I recently went on this journey of podcasting on YouTube, and you guys were an inspiration, amongst other inspirations as well. And it was like, so many of us, because I'm in real estate, obviously. So many of us real estate agents don't know what to do, how to move as a business. Credit gets either messed up or is already fucked up before we get into it. Even building a clothing brand, because I'll get into that as well. It's like, what do we do? How do we, so on and so forth? And it gets discouraging after a while. So I definitely saw that, and I was like, I have to talk to these guys, because it's going to not only help me and questions that I have to ask, but also help people to the masses of the following that I have and will grow. The questions that they might not even know that they need answered right now, because I'm in the same boat as them as well.
Yeah, for sure. Anytime that you're dealing with something or a problem or issue, that means other people are dealing with it as well. So if you can shine light on information that you're struggling with or questions that you have, guarantee it's going to help other people, because some people have those same questions. They just don't know where to get the answers, you know?
Exactly.
So,
Exactly. So to get started, I set it up in 2 different pages because I have Trev here, I have you here as well. And I know you guys are 2 sides of the same coin, but still dealing different matters, if that's fair. So I want to start with the credit aspect of it first, if that's okay.
yeah, absolutely.
So first off, there's tons of ideas. I want to start off with collections, right? So there's tons of videos out here suggesting that we are not to pay a collections debt. Once you're in collections, your credit is already hit, so why pay, right? Is that the attitude? Is that the attitude being promoted? How true is this statement? If that's the attitude being promoted, how true is this statement?
Completely false. If you have the ability to pay it off, reach out to them, be proactive, set up payment plans, do whatever you can do. I like to kind of compare it, I guess, an analogy of having an open wound on your body, right? If you have a collection that's there on your report and you're not dealing with it, you know, it has the risk of getting infected, making the report worse, right? If you pay it, that's your way of cleaning it, dressing it, letting it heal. Yeah, your credit, it has the damage done to it, but paying it will eventually let it heal, get your new skin and be looking pretty again, right?
Yeah, you might
So
have a little bit of a scar on your credit report, saying that you were in collections and it's now paid, but that scar eventually fades over the course of time. And then
will heal.
Exactly,
basically.
right? So maybe initially it's not going to, your credit score is not going to jump right off the bat by paying it down to a 0 balance, but within 6 to 12 months, as it starts to fade in the rear view mirror, your credit score will continue to get bigger and bigger and bigger and go in the direction that you want it to go in. But I would advise for people, if they are going to do that, that they call the collection agency and they say, I'm willing to pay this collection provided that you remove it from my credit score. And if they agree to that, have them send you either a fax or an email, something stating, if you pay by X date, that they'll remove it from your credit. Once you have that, and then you make that payment, you have proof that they were supposed to remove it. And if they don't, you can dispute that item with that proof and actually get it removed. Now, some collection agencies will agree to that term and they will remove it off of your report. Other ones say we can't do that. And so maybe they have different owners with different rules or policies or procedures in place that doesn't allow them to do that. But there are some that will do that. So it never hurts to ask, if I pay this, will you remove it off of my report? And if they say yes, then get verification that that's what they're going to do, then make the payment. And then at that point, you can get it completely removed off of your credit like it never existed, and then your scores would improve immediately. So that's an option. And again, so there's 2 ways to go about it. You know, if you owed $1,000 and it's in collections, a lot of cases you can call and do an offer and compromise. Hey, I'll pay you $500 or $750. I just want this off of my report or whatever it is. Now, usually if you don't pay in full, they won't work with you to get it removed. But if I owed $1,000 and said, hey, I'm willing to pay the full 1,000 today, provided you do this, right? Remove it off of my report. They're going to be more likely to say yes when you're talking about paying in full than if you're trying to negotiate and have it removed off of your credit because they're accepting less, right? And so the probability of getting it removed is better when you call with the full amount of money saying, I'm willing to pay this in full if you remove it off of my report.
Got it. So either way, we need to call them. Either way, we need to agree. One, I gotta pay this thing off. Like that has to happen. Now I know most people say, you know what, I don't want to call because the moment I verify it's me, I guess the 7 years starts over, or you know, now I'm agreeing that I owe this debt or something like that. So I don't want to call. I might just wait the 7 years or whatever it is. So
Here's the issue with that though. These collection agencies, they can re-report just like your car payment, how it gets reported monthly, right? If they wanted to, they can report that monthly. So that 7 years starts over every single time that they re-report it, right? So Again, if they just reported it once and never touched it again, it can fade off and fall off of your credit report. But in some cases, these credit collection agencies will report at least once a year to the credit report to refresh that 7 years so that they stay in front of you. Some of them do it, some of them don't. And so when you pull a copy of your report to kind of take a look at it and see what's negative, look at the last time that they reported it versus the first time that they reported it, because it'll say when it showed up on your credit, and it'll say the last time that they updated it.
Wow.
And if it showed up on your credit a year ago and they updated it last month, your 7 years is pretty much starting over. And in some cases, these collection agencies, after 7 years, they'll just sell that over to another collection agency. So if they can no longer report it on your credit, they get rid of the debt to another agency that they now own it. They can start reporting it for 7 years. And so there's little tricks of the trade that they can use to try to keep that on your report for as long as possible. In some cases, some people that own collection agencies own multiple collection agencies just so that they can transfer it back and forth, right?
But the best way to combat that is to monitor your credit. Okay. So yeah, there are those shady companies that are out there and they will try to do something like that, but that's what the FCRA is out there for, Fair Credit Reporting Act, right? So if you see that they're reporting it as a new collection on 1/13, and then you get your updated report and you see now that it's 2/13, that's not accurate reporting because they're trying to make it look fresh when it's not fresh, right? So understanding laws and making sure that you're actually using laws to your advantage as well will help you. But again, it's just like anything in life. If your credit's bad, you can't ignore it and hope that it gets better.
Yeah.
You have to actually act upon it, be proactive, and try to work to make it better. Not sit around and twiddle your thumbs and just say, "Well, time's going to pass. I'll start addressing this in 7 years." Start doing it now. You're going to be better off being proactive.
So. Wow, that's deep. I didn't know really any of that. That's incredible. Now, a lot of us aren't taught how to handle credit when we're young, right?
Yeah, unfortunately.
Typically, when we're in our late 20s and 30s, we realize we can't do much of anything without good credit. What are some good ways the average person can start the reparation process of a 400 to 500 credit score?
Really, the easiest way, and it's again common knowledge and kind of the most common answer: secured credit cards. It's probably the best way. You're going to have to fork out some cash up front, but usually they're guaranteed approval, so you're going to get that trade line and having positive, right? So it's all about having more positive on a report versus having more negative on a report, right? So if let's say you have 10 accounts total, 9 of them are good and 1 of them are bad, 90% of the report is good. So that should equal a pretty decent credit score, right? But if you have 10 accounts and 6 of them are bad, at the flip of a coin, you're more often to have to default and not fulfill on your obligations. Therefore, your scores are going to be down. So it's just about having positive. So if you're down in the 400s, you've done multiple things to get there. It's not just one account that you've defaulted on. It's several accounts and several defaults, whether it's late payments, collections, on a credit card here, auto loan here. So it's multiple things that have gone bad to get to that. And you want to make sure that you start pushing the positive, right? So still address the negative, try to make that, get where you need to with the negative. And even if it's paid, that's still okay. He accepted responsibility or she accepted responsibility, and they at least got this back to 0. They're no longer owed, and now the report can start to heal. Plus you're adding positive to the report as well to drown out the negative, essentially.
So question, I actually didn't write this down. I going off of what you said. Is it a good practice to pay things in full? So if I put $1,000 on my credit card, like I charge something $1,000, but then day 2, I pay the entire $1,000 off. Is that a good practice?
I would say yes, because are you getting cash back on that card, or what's the reason that you're putting balance on and then paying it off? Is just the fact you don't want to carry a balance? What is?
Yeah, you don't want to carry the balance. You're trying to build the credit, but you just don't really, you don't want to carry the balance.
Right. So making sure that it's paid. Obviously, obviously now you're not at a risk of defaulting next month because you have 10 other bills that you're trying to pay and you forget, right? You're using the card, you're keeping it in good standing by using it, because if you don't use your credit cards, they will just shut it off. And now you have a closed account, which will hurt you, right? So you want to keep the longer you can keep accounts open, the stronger your scores will actually be in the long run. So a credit card, if my number one tool when it comes to, my number one tip when it comes to credit would be credit cards. And that's, you know, there's so much negative about credit cards, but that's because people are using credit cards to buy things they can't afford and do things that they shouldn't be doing with them, right? So now they don't have the ability to actually pay the bill because they put that vacation on there that they couldn't afford in the first place or whatever it is. So I strictly use my credit cards for my monthly bills, groceries, gas, utilities, Wi-Fi, satellite, and these things are all on auto pay. This way they get paid. I get cash back and I just pay the card off. So now my credit card's in good standings. I get higher limits this way because my usage is actually consistent, right? The higher the limits you have on the credit cards, ultimately the higher your credit scores will climb. So that's one of the issues people have. Well, how do I break past 720s? One of the first questions I ask them is, well, what's the highest limit on your credit card that you have? And usually that answer is 1,000 or less. And you're not going to break past that 720 wall unless you have a couple grand available on those credit cards. And I'm not saying you have to spend. If you have a $5,000 limit, that doesn't mean spend $5,000.
Yeah.
You can use those credit cards twice a year just to keep them active. Put your gas on it twice and just pay it off, and the card will stay in good standing. They shouldn't lower your limits. But that's how you'll break past that 720 barrier, basically.
It's great that you said that, because I remember I had a credit card, right? It was actually I went to Victoria's Secret for my girlfriend at the time, and you know they had a sale, whatever, get a credit card, get like 30% off. So I got the credit card, and you know I had it for about a year and some change, and I don't need to continuously go to Victoria's Secret. I'm a guy, you know.
Yeah.
So,
only on special occasions.
Exactly. So I think I had a zero balance for about 3 months.
Yeah.
And right after that, they shut my credit card off, and I got a hard inquiry. I was just like, why close the account if I've, you know, kept paying? I didn't have any late payments or anything like that. And it just, you know, my credit score just shot right down and things like that because of it. So that's crazy that you said that, because a lot of people don't know that. I learned that the hard way. You know, even if you got to keep a couple bucks on it for whatever reason, you know.
Yeah, exactly. Just minimal spending. But so if you don't even want to do, again, and Trevor preaches that, we preach it for our businesses, right? So marketing expenses or whatever it is, use a credit card, get cash back. It's money that we're going to have to spend anyways, pay it off immediately, but now we're getting cash back for the business, right? But it keeps it in good standing, and they're not going to just close it on us because we're actively using it. And these are all kind of mistakes and bumps that we've gone through, not only with our own credit, but helping people deal with credit for over a decade, to know these little things and what companies will do or won't do, and how to keep things in good standing and why to keep them in good standing. So,
Now,
so yeah, it is good practice just to pay it off monthly. You know, some people will say no, some people will say yes, but credit cards, I would say pay them off monthly. Now, vehicle payments and things like that, if you bought a vehicle and you pay it off in 3 months, it's not going to help your credit really. You know, they want to see a payment history. So some things you do want to pay for the course of an entire loan, but credit cards is one thing that you could run a balance up and pay. You know, I pay my credit card every single Friday, and my credit score is like 813 or 811 or something like that. But I never carry a balance over a 30-day period. I usually pay them off every single Friday just to kind of know where I'm at. I don't even let it drag on for the full month. So
wow. Now you guys secure loans and secure credit cards and secure loans, as you said, seem to be a popular way to quickly boost one's credit. However, even with secure credit cards, there seems to be a barrier due to one not being a major credit card, for example, like Sky One Credit or something like that. right? Now, if I'm in a position to not have any bills to be put under my name along with a non-major credit card, how do you suggest that I'll move forward in the credit building process?
You need to find a friend or a family member that has good credit and have them add you as an authorized user on the back of their card. That's what I would do.
Credit,
right? So you can get you can get grandfathered into their history. So if I have 10 years of history on a credit card that's a $10,000 limit and I keep a zero balance and I add Chris to my credit card, now Chris gets 10 years worth of payment history grandfathered onto his credit report. It's called an authorized user. I give you authorization to be on my credit card. Okay. Now I don't have to necessarily send you a credit card where you're actually swiping it and using it, right? I could say, just send the credit card to me and then I can cut up the credit card so you never have access to it, but yet you get some positive history on your credit report. That'll automatically jump up your credit score. Now, the issue that I've seen here is some people do that. Let's say you have a $10,000 limit and the family member runs up a $9,000 balance. Your debt to credit ratio is now 90%, which can drag your score down. So the caveat to doing that is making sure that you're working with somebody that doesn't run up their credit cards and hold large balances. People that are paying their balances off monthly or have very low balances at all times, because it can ultimately hurt you if you have a $10,000 limit and it's maxed out. It shows that that individual is not that responsible with lines of credit, right? They don't know how to manage their credit. And so before doing that, you would want to make sure that you have a conversation with that friend or family member or whoever it is, and say, do you carry balances on this? You know, what's your limit? What's your balance? Understanding what their spending habits are, because there's plenty of people that have $5,000 limits. They only use that card a couple of times a year and it stays open and it stays active, but yet there's not high debt to credit ratio on that credit card. So again, you get the benefit of now having a report or a trade line on the report that shows 10 years of positive payment history, which will make your score start going up. Then that's going to give you the ability to start getting secured cards. So a secured card is easy to get. You can go to your local bank, hand them $500. They give you a $500 limit. They hold that $500 for about 6 months. You show good payment history over that 6 months. They release the $500 back to you, and it goes from a secured card to an unsecured card, because secured cards don't mean as much as an unsecured card does, right? So if you're going to get a loan and you have 3 cards and they're all secured, that doesn't necessarily hold as much weight as if you had 3 credit cards that were completely unsecured. But again, it took time for you to get bad credit, and it's going to take time for you to get good credit. You know, at 60-day credit repair, we take pride in, moving very, very quickly. And we do have a 90-day warranty where we work with people. And if their scores don't jump up at least 100 points in 90 days, we exit them of the agreement, just because we don't want to charge people money for something that they're not getting value out of. Right. And so we keep that very close to heart, because the customers are what helps us make money and pay our bills. And we want to keep a good name. The best way to keep a good name in the credit repair industry is by making sure that you're doing what's right by the customer, not necessarily what's right for you in terms of lining your pockets.
Wow. And that actually, well, you answered my next question, mostly. But when it comes to credit piggybacking, becoming an authorized user on somebody else's card, it makes somebody nervous, right? So I'm saying, like, hey, I have a 400, you have a 720 or 750. I need you to make me an authorized user that help boost me. But, now you don't trust that, I'm going to do the right thing. So what is a good way to like pitch that thought to somebody or pitch that idea to somebody?
When an individual calls into the credit card company to add as an authorized user, it takes less than literally 3 minutes to do this. It's free, doesn't cost them any money. They will say, where do you want us to send this card? And you say, I don't want a card sent out. Or you say, send the card to me. That way that person has no access to actually swipe a card and spend it. And they've never been given a number. So they also can't go online shopping with it either. So they get, the benefit of the history and getting it on their report, but they don't have actual access to go out there and get themselves into trouble. So yes, if they don't understand how it works, big concern. I'm giving you access to 10 grand and my name's on the line for it.
Exactly.
But really you basically don't give them access. That's how it works.
Now the caveat to that, just so that you understand, piggybacking is considered illegal if somebody's charging you for it, right? Like I can't charge you $1,000 to put you on my credit card because it is called piggybacking by the FTC. And there was a company that was shut down because that's all they did is they would take people with good credit that wanted to make a little bit of money and say, hey, Chris, I'll pay you $500 for every person that you add to that credit card. And you add 10 people, there's 5 G's for you, but you have no association with the person that's being added. That's illegal. Okay. So that's why I'm talking about a friend or a family member, somebody that you're familiar with, because that's not illegal to help out a friend or a family member that's not charging you anything for it.
And essentially it is really just to get your foot in the door.
Yeah.
Because a lot of things happened mortgage wise. So now they see authorized users. So before they were getting authorized users, pumping up their scores, getting mortgages. They've now become wise to that. So now they know, okay, this is an auth user. We're not going to give an approval if that's on the report, if that's all their history, right?
Wow.
So you get that auth user. Now you have your foot in the door to go get your own credit card.
Yeah.
Go get your own car, right? Yeah. So you use it to get your foot in the door. And then from there, you're on your own.
Start building yours based upon the boost that you receive. Don't just rely on that one boost. Start getting your own cards that are just in your name, because it's very clear on a credit report that it says authorized user, meaning that you're not necessarily the responsible party for that. Yes, your scores will increase, but for loan purposes, they'll look at each line item to see what it is. And if you had nothing on your credit report but 3 authorized users and your score was 720, that doesn't mean you're going to get a big loan because you have a 720 credit score, because of the items that are on the report also matters as well. So Coulter's absolutely right. You get your foot in the door, then you start putting yourself on a pedestal by making all the right decisions, starting to create new accounts that are just in your name, even if it's a $300 credit card limit or $500 credit card limit. Over time, they'll raise your limits, right? As long as you have a positive payment history. So it's really just about boosting the score up enough to start getting approvals on your own so that you can stand on your own 2 feet. And in a year or two, you can be removed as an authorized user and you have good credit.
All right. So you don't suggest, from what I'm hearing, you don't suggest I become an authorized user, I go from a 5 to a 720 and then go apply for a loan to get a house. That's not going to work. That doesn't make sense.
They've just become wise to it, meaning exactly what Trevor said. If they, just for an example, if they pull your report, all they see is 3 authorized users, they're going to say, okay, this guy's got a good score, but it's nothing he's done. It's all these other people's history,
and
right?
the bank still don't trust you.
So again, get your foot in the door with that, because now you have the good score. Now you're armed and you can go start with the credit cards at a $300 limit and you work your way up. Right? Get the higher limits, get your own auto loans without a cosigner, right? Because you have that to be able to stand upon, right? Or piggyback off of, okay? So use it, get your foot in the door, but then again, your credit is your credit, not everybody else's credit. It's you need to start to establish your own positive history so that you can get your own lines of credit extended to you, your own trade lines.
Understood. Now, to go more into the business realm of things, right? If I just started a business and my personal credit isn't the best, where do I go to build business credit?
So business credit, that's always a fun subject. You know, a lot of people want to put weight on business credit, right? And business credit is great for specific industries, not for every industry.
Okay.
Right. So for instance, if I'm a contractor, you know, I can build business credit a lot easier than somebody else that maybe owns a consulting company, right? And what I mean by that is you can go to Home Depot, Lowe's, you know, the paint store, you know, the stucco store, whatever, because I'm a general contractor. So I do business in all these different companies, right? You can go in there once you get what's called your DUNS number with Dun & Bradstreet. Okay. That's one of the first things you got to do is get your DUNS number. Okay. And when you get your DUNS number, basically it's like creating a report for your business. Then you go to Lowe's, Home Depot, Office Max, whatever it is, and they'll give you like a $5,000 line of credit for your construction company at Lowe's or Home Depot or whatever. You buy lumber and you're on a net 30 or net 60, meaning you got to pay within 30 days or 60 days. Again, their terms are all different. Some are net 90 days, right? Because they know that you need the stuff, and then you'll do the work, and then you'll get paid in 2 months or 3 months from that work. So in some cases, they'll spread it out over 60 days, 90 days. Some are just a net 30. It just depends on the company that you're working with. But in those type of industries where you need to float something for a couple months, business credit is really good, because those type of companies like Lowe's, Home Depot, Office Max, they will utilize your business credit and help you get access to whatever you need to get access to get the job done, so that you can ultimately pay them later. But on a consulting company, what do you really necessarily need from like a Lowe's or a Home Depot or a paint store or a stucco store? So there's specific industries that can really benefit from having corporate or business credit, and a lot of industries that don't really need it. If you do any government contract work, you're required to have a DUNS number and have business credit set up, right? But there's plenty of industries that will never need it or ever even use it. So you want to be careful about spending too much time on corporate or business credit if it's not something that you're going to ultimately need, because in a lot of cases, even if you're starting out, you still need a personal guarantee, right? Backing that line of credit. So if you have a 400 credit score, it's not going to be very easy to build business credit, because at Home Depot or Lowe's, they still want you to sign for it, even though it's going to go in the business name. You're kind of co-signing for the company, right? They need somebody to chase after, provided that it doesn't work. Eventually, over a long period of time, 2, 3, 4 years, then eventually your business credit could be strong enough to kind of stand on its own 2 feet. But initially, you're going to have to help it get there. So if your credit's not the best, you're not going to be able to build corporate or business credit very easily at all. So it's your personal credit is going to be the king in this scenario. Business credit is a far second. In some cases, won't ever even be used. So
it really depends on the industry. So again, like
yeah.
I'm an agent, a real estate agent, right?
Okay.
So I guess a DUNS number wouldn't be needed, anything like that. But do you guys suggest building business credit in as a real estate agent?
No.
Not necessary.
No. If you have good personal credit, then that's you'll be fine. What would you want to utilize business credit for? I guess in the real estate industry, I guess is a better question.
I guess it would be more like I guess supplies and let's say phones and internet and things like that. If you're running, because me myself, I have my stuff under an LLC, right? So I get paid through an LLC rather than
Yes.
consultant. So I guess it benefits with the tax write-offs and things like that as well. So if I'm able to use business credit under my LLC, I guess it'll benefit some way, somehow. Like, am I far off, or like?
No, because you're still going to have to sign for it personally initially.
Got it.
It'll be years of you signing personally before the business can ever carry any weight. And I've never really seen corporate or business credit get $100,000 or $200,000 loan just by itself. Because if somebody got a $500,000 loan on business credit, they can BK their business and they walk away with $500,000. And the banks or whoever borrowed you $500,000 or 100,000 or 200,000, they have no one to chase after because the business just went belly up.
Yeah.
Right. So somebody could legit go just easily build corporate credit, start getting a bunch of loans and BK that company, and then do what? They go ahead and just go set up an LLC and do the same thing over and over and over. They still want to chase somebody down for that money, which is usually the owner of the business, because you're ultimately co-signing for the company. It takes a long, long time to have business credit ever be valuable to even enough to even get anything with it. Besides just minor, maybe $500 line of credit at Office Max or Staples or whatever. Like if you're struggling spending $500 at Office Max or Staples, then you're doing something wrong in your business, right? You shouldn't necessarily need corporate or business credit for small purchases like that.
And you just get a business card with your personal name's going to be on it. It's a business expense.
Mm-hmm.
Write it off through the LLC.
Like a business debit card that
You can have a business credit card, but it's going to have your personal name on it as well. So,
Okay.
but it's for business expenses, right? You're going to Staples, you're buying, paper, whatever it is, but it's for the business. You catalog it by using your business credit card, you pay it back and document it that way for your tax purposes.
Okay. Are there like certain banks that are recommended to do something like that? Like, do you just go online to do things like that, or?
It just depends on your situation, right? There's like creditcards.com where you can filter it. It'll say for people with excellent credit, with good credit, with fair credit, with poor credit, right? Because somebody with a 500 credit score or 600 credit score, that's considered poor credit.
Mm-hmm.
So they're not going to go apply for a Discover card that's only for people with excellent credit or an American Express Platinum card. So they segment it out based upon what your scores are and what you could potentially qualify for. So the bad credit ones have a lot of secured credit card options, right? The excellent credit ones have a lot of Discovers and American Expresses, the ones that are a little bit harder to get,
Mm-hmm.
right? So creditcards.com is a good website to where you can basically choose what your credit score is, whether it's bad, fair, good, or excellent.
Mm-hmm.
And then it'll segment out those cards that are best for you to apply for.
Got it.
And that's a free tool to be able to help you. It doesn't cost you money to go there and have that advice. Credit Karma will do the same thing for you. It's basically how they make their money, right? It's a free app, but they're there to get kickbacks, offers, right? So they push this, hey, this is a card that you have great approval odds on. They have that little scale right next to it. And then, great approval or pre-approved or don't apply, basically, right? And that's a free tool that anybody can download and access and have that, help their probability of getting approved.
Got it. So now COVID-19 is birthing a lot of entrepreneurs. However, tons of us, real estate agents included, are not sure where to allocate our money, i.e. investments, bank accounts, marketing. What are your thoughts on this matter?
Depends on what your goals are.
Okay.
Right? Like some people are happy making 100 grand a year. Some people aren't. Some people, maybe their goal is to make 200 grand a year, $250,000 a year. If you're already making 100 grand a year and you're very happy with that, then yeah, you take whatever's off the top and start investing on the side or start stacking cash, put money in the bank. But again, it depends on what your goals are. Are you trying to work out of real estate? Then yeah, put the money towards investments so you could eventually work out of real estate. Your actions have to match what your goals are, right? And so to come up with a generic response wouldn't be fair because everybody's going to be different. Everybody has different goals of what they think success is or what they would like to accomplish, right? If somebody's only trying to make 100 grand a year and they're making 50 grand a year, yeah, put it towards marketing. Get more clients so that you can get to that 100 grand a year mark. Or if you're making 100 and you want to make 200, put it towards marketing. Focus on where you want things to go. If you want to phase out of real estate, then focus on the investment side. If you love real estate and you're making good money and now it's just about stacking cash, then make your 100 or 200 or whatever you're at income wise, be happy with that and then create a plan. I'm going to put 5 grand a month away. So every year I'm putting 60 grand a year away. In 10 years, I'm going to have $600,000. Right? So what are the goals? I love real estate. I'm never going to leave real estate. I enjoy making 100, 200 grand a year. I just want to save money. Use this as a vehicle for saving money. I want to ultimately use real estate as a vehicle to make enough money to phase myself out of real estate. Then go towards the investment side. Take whatever's extra, that 5 grand a month extra, and put it towards investments. In 10 years, you got $600,000 in investments. I would guess it would no longer be 600 grand in 10 years. It might be $1 million in 10 years if you're putting that money towards an investment. Okay. And so it really depends on what you're trying to accomplish. So your actions just need to match whatever the goal is. right? So everybody's goal is going to be a little bit different. Just make sure that you're not saying one thing is your goal, but your actions aren't matching that. That's really what's important. But I would say in your guys' industry in real estate, one of the most important pieces is to probably build a great personal brand. And I would be investing in building a personal brand, whether it's on social media, however you want to do it. You want to be the first person that anybody thinks about when they think about real estate in your industry, in your area, right? And so the best way to do that is by having a strong personal brand, not necessarily putting ads out for the purpose of getting an immediate customer, but maybe putting ads out so that you can get more followers, to where it's just, hey, you click this and it takes you over to the profile where you can get a new follower. Because if you have 30,000 followers in your local area and it's only a population of 300,000, you got 10% of the market following you. See what I'm saying? So at that point, you can pretty much shut off marketing and stay busy enough just doing deals. So now you're no longer spending money on your personal brand because it's now developed. Now you're able to just to create deals constantly off of that social media. Or you can continue to just spend money on ads trying to get an immediate client and they're never following you. So I would rather have the follower rather than the client on an immediate basis, because if I have enough followers, eventually if they follow my content, I'm going to be top of mind when they're ready to execute in real estate and buy a new property, right? Or sell their property. So at that point is when you really start having a lot of control. With Real Business Owners, we grew that over to 90,000 followers. Now we have $0 marketing budget for easier accounting, and we still onboard more clients than we ever have at a higher price point than we ever have. Okay. Based upon the fact that we built a personal brand. Or I could have kept spending that 15 grand a month that we were spending and have that be a continued expense for the lifetime of the business to try to grow the business. That's $180,000 in a year. Would I rather take 180 grand in a year and put it towards advertising and just try to get clients for that year, or $180,000 towards building a personal brand so that I never have to market again because my brand's so strong that clients are just flowing in? Does that make sense? So again, it has to match what your long-term goal is. And so I'm a big proponent on trying to build a personal brand and becoming an authority for your industry, whether it's real estate, whether it's credit repair, whether it's just business content in general, right?
Yeah, I think that is a good tip that applies to really any business. Things are changing, I think, as far as the landscape, meaning people don't want to do business with businesses as much. They would rather deal with people, you know? So when they think Trevor and then they think easier, right? They think Bolter, but then they think credit repair after the fact, right? So
it's the same thing.
They feel like they're doing business with you,
yeah,
not just with a business, right? So then, and it makes it feel more intimate.
Yeah.
They don't feel like they're just another number or just another customer or client. They feel like they know you personally, they like you, they want to engage with you. And then if you have followers, again, maybe they're not even interested in real estate, but they like you, they know people, they have family, friends, and they, hey, go hit this guy up, go follow this guy. Hey, you want to sell your house? Go check this guy out, right? So that it can be a much wider net.
The idea is they have to know you, like you, and trust you. So with the Real Business Owners podcast and Instagram, I'm giving value. I'm giving them information on a day-to-day basis. They feel like that they know me, they like me, and they trust me because of the information that I've been giving them. So now when they reach out to us, it's no longer, hey, I want to know more about your company and what you do to see if it's a good fit. They've already made a decision. I want to work with these people based upon following us for the last 6 months. They've got value from us for the last 6 months and didn't spend anything. So imagine if they spent money with us, what value they would get, right? And so that's the concept, right? So when you think of Tesla, what's one of the first things that you think of?
The automated car.
I think of Elon Musk. With Amazon, I think of Jeff Bezos.
Jeff Bezos, yeah.
So nowadays, there's an individual that's tied to the brand.
Where everybody was hidden.
Imagine Coca-Cola. Who the hell owns Coca-Cola? I don't know. They've been around so long, but back in the day, corporations used to market to people, and people did businesses with corporations and businesses. Nowadays, people want that personal connection. That's why a personal brand is so important. They want to feel like that they're doing business with an individual or people that they know, like, and trust. People watch Elon Musk. They see what he's doing. They like what he's doing. They think he's a badass. So, fuck, I want to buy a Tesla because of Elon Musk. I support him. He's like a forward thinker. He's done some amazing things. I want to get in that car. You understand that anything that he produces is going to be quality because you've been following him around. So therefore you're wanting to start supporting him, right? And so personal branding is probably the most important thing that needs to happen over the next 3 to 5 years. And I will bet money right now that anybody that doesn't have a personal brand in the next 3 to 5 years, they're going to be the ones that are struggling, because it's going to continue to go in that direction of, I want to do business with somebody that's given value to me that I know, like, and trust. And so if you're on your Instagram page or social media giving value on a day-to-day basis without ever really expecting anything, they'll come, right? It doesn't necessarily happen overnight. If you try to measure it in the first 6 months, it's probably not going to be the result that you're looking for. But the fact is you don't start a business and then measure it in the first 6 months and say, well, it's not working, I'm just going to quit and give up on it. It takes time to build a business, right? Build a brand for a business. It's no different when you're trying to build a personal brand. It's going to take time. It's going to take a year. It's going to take 2 years, but it'll be the best 1 to 2 year investment you ever made, because now eventually you'll have no marketing expense.
So you don't, obviously not, but it's not a fear in the beginning where you say, I'm going to give too much value for free. Maybe I might be helping take us out of the business, if that makes sense, if I'm articulating that correctly.
I see what you're saying, but that's a scarcity mindset. That's not an abundant mindset.
Got it.
You see what I'm saying? Scarcity mindsets don't get very far. An abundant mindset gets very far. Like, I'm going to get mine either way, but if I can serve other people and impact other people in a positive way and help them in any way, shape, or form, you're only focused on yourself in that situation, having a scarcity mindset. You're trying to protect what you have rather than just letting it go. Grab sand and try to squeeze it and protect it and hold on to it. It's going to fall out of your hand. If you pick it up and hold it softly, it's going to just stay in your hand. So don't squeeze too tight on what you have the availability to give to somebody else. If there's good information and you can impact somebody in a positive way, even if that individual doesn't hire you, again, as Coulter said, they might have a friend, family member, somebody in their ecosystem, a coworker that needs to sell or buy a house, and you've given them so much value that they feel almost like, if you give something to me, it's like a human element. I want to give something back to you.
Reciprocity. Right?
Exactly. It's the law of reciprocity. That's exactly what it is. Right. And so if somebody's giving me so much value, I want to find a way to support that individual any way that I possibly can. And that's just how it works. Right. And so I wouldn't go into it with a scarcity mindset and say, well, maybe I'm giving too much information, because the individual that's giving all the information, look, information is only information. Most people won't do anything with it.
That's exactly what I was
most people won't do anything with it.
What Trevor said at the very beginning of the application. So when you asked that question, I actually thought of a Gary Vee video. I can't remember how old. It's got to be at least a year, maybe 2, and you probably even know it. Where he said, I can tell everybody exactly what they need to do to be successful and do exactly what I do, because they're not going to go out there and apply it.
Yeah,
right?
They won't do it.
But they still they're still being educated, right? And they still know more than what they did know before they started following you or whatever it is. So now they trust you, and they trust you to go out there and do the job for them and do it the right way.
Yeah.
So yes, they know things, but still, even if I know something, I still would rather pay somebody that's in that field and does it every single day. Because what if something doesn't go smoothly? And what if I do hit something that I don't know, or that I maybe know kind of, sort of, but I don't know all the way? I would rather spend the money.
It's like us giving tax tips. We give tax tips on a few of our podcasts, and we go in depth. I think it's episode 24, the easiest way to put money back in your pocket. We go through some tax tips, and we get pretty detailed with it. We went through one that was all about entity structures, making sure that you're structured properly, giving a bunch of free information. Guess what? Somebody listens to that and says, well, I don't know how to switch my entity from an LLC to an S corp. I want these guys to do it. They just gave me a bunch of information. Or yeah, okay, they just told me this tax tip and this tax tip, but I don't necessarily know how to implement it myself. I still need an accountant to help me implement this. I want to reach out to those guys and say, hey, will you help me do that thing that you talked about?
Mm-hmm.
Kind of like what goes around comes around. Karma, right?
Let's put it this way.
We go around helping people, it'll come back.
Let's put it this way. How does somebody get in good physical shape? Like if I'm 100 pounds overweight, how would I go about getting in good physical shape? What would you recommend to me?
Exercise, diet.
Okay. So you just barely said it. Exercise and diet.
Mm-hmm.
Everybody knows that, right? It's really not a hard concept to understand. But why is obesity at an all-time high? You see what I'm saying? So they have the information. Everybody has the information. We all know we need to exercise, and we all know we need to eat better in order to lose weight.
Mm-hmm.
That's common knowledge. Why the hell are there personal trainers out there making money? We already know we need to exercise.
That's a great point.
You see what I'm saying? But people need to be held accountable. People need to work with an expert that can help them get to their goals, because they already know that they're not the action type individual unless they have somebody holding them accountable, right? I see people at the gym every single day working out with a trainer. They know that maybe that's what they need in order to get the result that they want. There's plenty of people that want to just pay and buy their way out of situations. Okay. So you can give, it's like a plumber. Hey, I'm going to show you how to fix this toilet. Here's how you do this, 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 and this. Yeah. Somebody might not call them for that little toilet fix because they're going to take care of it themselves, because you just did a tutorial on how to do it yourself. Mm-hmm. But next time something big happens and that you don't know how to do yourself, who are you going to call?
I'm gonna call them.
You're going to call that guy that helped you that one time. You know what I mean? So he's probably not going to make a crap ton of money on fixing a toilet anyways. So maybe it's better for him just to share that information and get a higher paying customer later when something else goes wrong, or if they're building a new house. Hey, I want this plumber to plumb my home, or whatever it is. And so you have to think a little bit more long term, and you have to think with an abundant mindset and not hoarding the information that you have that is valuable to other people, because you want to be the authority and the expert in the industry. The only way to become an expert or the authority is by giving information that other people aren't giving, right? So a lot of accountants don't want to give their tax tips out. That's just what it is. But a lot of accountants are still spending a large amount of money each month on marketing, and we're not. So that shows you how valuable the information is.
That's great that you said that, because I tuned up my car last year from a video on YouTube, and it took me so long to do it. I will never do it myself again. So
exactly. Yeah, you went to
you ended up frustrated with busted knuckles and said, "I'm paying the dude next time."
Exactly.
So, exactly.
YouTube University doesn't work every single time,
YouTube
University all we want, but at the end of the day, we can all change our own oil. But how many oil change places are there? I just don't want to do it. I'd rather pay somebody the $60 or $80 to change the oil. I can do it myself. I just don't want to spend my time doing that.
Mm-hmm.
Right. So a lot of people don't want to spend their time doing any of that, so they want to hire out people to do the things that they don't want to do. Nobody wants to do everything. But again, become the authority by giving good content, valuable information. That's how you do it. Then you're going to stay top of mind. You give that information one time that affects somebody in a positive way, they're not going to forget about you. I promise you that.
Dope. I have two more questions for you guys. I feel like I could stay here all day talking to you guys, but I know you guys are super busy, and this is like the more and more questions just keep popping into my mind, and this is great. So just two more questions, guys.
No, you're good. Ask away.
All right. So starting a business may seem intimidating to a lot of people. They want to do it, but they're scared. They don't know how to. So let's say after filing an LLC, which is, I guess, the most notable to the, regular person, and getting a DBA account, capital seems to be a big problem. How do we attack this issue?
How do you attack it? By making sacrifices. That's how you attack it. Everybody wants a better future without giving up what they currently have. A lot of people are in what's called maintenance mode. They want to maintain their lifestyle, but yet they want more. That's just not how it works. Sometimes you have to take a step backwards, right? We've preached this here in our companies, and we've had people sell their cars and now they ride their bikes to work, and then they ride their bikes home because they're willing to make a 1 or 2 year sacrifice to put what they say that they want at the forefront. Not enough people will be willing to take 2 steps backwards to set themselves up for 10 steps forward. When I was making 120, 130 grand a year, I was driving a Mitsubishi Lancer with no air conditioning. Was I not?
Sir Lancelot.
Sir Lancelot is what I called it.
Sir Lancelot.
So Sir Lancelot, bro, the Mitsubishi Lancer,
It
dude.
was on 14s.
You know, 14-inch. Dude, I was rolling deep, rolling hard, you know. Basically every motherfucker was laughing at me, right?
Mhm.
You know, but at the end of the day, they can pull up next to me in their Benz all they want. They're making 80 grand a year. And what they're doing is they reach a certain point and then they want to protect that lifestyle. And if you're protecting something, you're not going to grow from it. Okay. In some cases, you're going to have to take a step backwards and make specific sacrifices. Okay. It's not uncommon for somebody that's starting a new business to work a couple jobs, and one job is funding their company, the other job is paying their bills. Whatever you have to do, I don't care if it's DoorDash at night for 3 hours. If you can get 60 to 80 bucks in 3 hours every single night, 7 days a week, it's going to add up. In 10 days, you just made $600. You see what I'm saying? So the issue is people want to keep the life that they have now, but they also want more. And it just doesn't work like that. There will be a sacrifice that's made, whether it's a sacrifice with your time or whether it's sacrifice with your money, meaning I'm going to sell this stuff that I currently have and I'm going to save more money. Okay, that's a money sacrifice. Or I'm going to ultimately use my free time at night to bring in more money to help float this period, because there will be a 6 to 12 month very difficult period when you're starting a business. That's just the way that it works. What are you doing to make sure that you're setting yourself up for long-term success? Because some people will get 6 months deep in the process and like, this isn't working. Like, I would have to get another job or something to try to make this work, or I'd have to sell my cars, or, you know, live in a crappy house. Again, more people are worried about what other people think of them than what they're ultimately trying to accomplish. Wow. I wanted to be worth millions and millions of dollars. So I don't care what the Mercedes thinks of Sir Lancelot when I pull up next to him at a stoplight in a $3,000 busted up car with 14-inch rims and no air conditioning. It's 110, 115 degrees where we live in the summertime. I was sweating my ass off for months and months every single year while I was making 6 figures. That's not a sacrifice the common individual is willing to make. But I knew something. I knew opportunities love to find money. Okay. I knew I wasn't the brightest bulb. I didn't graduate with honors or anything like that. I actually was a super senior. I didn't even graduate with my class. I had to take continued classes after my whole class graduated. I was a terrible student, very terrible student. So I knew that I didn't have the intellect in order to be massively successful. And I knew that success or opportunity seeks a skill set or knowledge or money. So I knew with my sales job, I was very good at it and was able to make 120, 30 grand a year with my ability to communicate, not necessarily intellect, right? Or book smart type stuff. I used my skill set to make me money, to put money to the side, living a very minimal lifestyle, growing a personal bank account, and then opportunities started presenting themselves, because opportunity always seeks money. Poor people always wonder why, man, I can't catch a break. There's no opportunities for me. They're looking for opportunities. They can't find anything because they don't bring that opportunity any value. They have no money and no skill set. That's the issue. They either need to work on getting a specific skill that brings an opportunity value, or money, which brings opportunity value. Why do you think rich people get presented with opportunities all the time? Because they have the money, and opportunity finds money. If you don't have money, you're not going to find opportunity. If I'm a programmer, but I'm broke, I can partner with somebody that wants to build an app. And I can say, I can use my skills to help you develop that app, but I want 25% ownership of it. I'll do that at no cost, but I want ownership or equity in that app. So they're using a skill set that they've developed, not their money, in order to get in on an opportunity.
Mm.
You see what I'm saying? So if you don't have a skill set and you're not the brightest bulb like myself, again, I'm not talking crap on anybody because it's just true. Some people don't have the book smart game. That's just not my thing, right? I didn't do well in school. If that's you, then you have no other choice but to put money in the bank for opportunity to find that money. How do you put money in the bank? By living a lifestyle down here with an income up here. That gap gets put over into the savings account. Year after year, it keeps growing and growing and growing. In 3 or 4 years, now you have 100 grand in the bank or 150 grand in the bank, and somebody's going to say, hey, do you know of anybody that has 25 grand that wants to invest into this opportunity? And you're like, I know a guy. Me. You see what I'm saying? So that's really how you set yourself apart, is by living a very, very meager lifestyle. You have to live like they're not willing to live so that you can live like they can't live. Go backwards in order to set yourself up. It's like a catapult. Go way back. The further back that you can go and the longer you hold that, when you let go, boom, you're off. But nobody's pulling back. Nobody's willing to sacrifice what they have today for a better tomorrow. They want to keep what they have today and they want a better tomorrow. It just don't work like that.
Wow. That was a lot to ingest just now. That's crazy. That was deep. I don't know, y'all. That touched my soul just now, honestly. That's crazy. Last question.
We'll call this episode Touching Souls.
Touching Soul.
So that's what we'll call it. We're going past the physical form. We're just talking spiritually now.
Spiritually, like the soul, you know.
Mm-hmm.
All right. So all right. America wants more and more small businesses to be built, right? Hence as to why we're able to get so many tax breaks as small businesses. Now, there's a legend of someone being able to write off a yacht, 100% write off as a real estate agent. And Grant Cardone actually wrote off a jet. These are the actions of a confident entrepreneur. However, the common entrepreneur will see this as intimidating and will just set aside the 30 to 35% of their entire gross income. On a smaller level, in the field of real estate, do you suggest writing off your car?
Sorry, I had a 12 o'clock meeting. It's 12:03, so I just had to text him and tell him I'm running behind.
All right.
So state that last part again. I heard the first part.
All right. So there's a legend of someone in real estate being able to write off a yacht as 100% write off, and Grant Cardone wrote off a jet. These are the actions of a confident entrepreneur. However, the common entrepreneur will see this as intimidating and will just set aside 30 to 35% of their entire gross. On a smaller level, in the field of real estate, do you suggest writing off your car?
Without a doubt, 100%. You should write off your car. You're driving from appointment to appointment. You're utilizing your car. You should be writing off. You get 52 or 53 cents, or it's 52, 3 or 4 cents per mile. So if you drive, if you drive 10,000 miles in a year, you're getting $5,400 on a tax credit. Without a doubt, you should be writing, any business, any entrepreneur in the world should be writing off their vehicle. Now, if you use your vehicle for 50% personal use and 50% business, now that only allows the vehicle to be a 50% write-off. So if you have 10,000 miles on it, you can only write off 5,000 because that's your business use. It's very rare that somebody has a car that's 100% business use and they just don't use it at all for personal reasons, right? And so if you buy a $100,000 Escalade and you're using 60% of the time for business, 60 grand of it goes towards, a tax credit. The other 40% you're using for personal use, so you don't get the other 40 grand, okay? But 100% of agents should be writing off their vehicle, without a doubt. Should be writing off a portion of their home office, should be writing off a portion of their utilities, should be writing off a portion of their cell phone. They should be writing off a portion of their mills for business mills. All of those things are 100% accurate when it comes to real estate agents, and they should be using all of those annually for their tax returns. 100%.
Now, do we do that as an LLC or
Yeah.
as a?
Yeah. You can do it as an LLC or a sole proprietor. It doesn't matter.
Got it.
So if you're just doing business in your own personal name and you're getting checks to you, your commission checks are to you, that's considered a sole proprietor. You can still write off all those things.
Wow.
The LLC just gives you far more protection. So if you get in a car accident and somebody wants to sue you, and it's in the business vehicle, they can only, and you only keep $5,000 in the business account. The only thing that they can touch is $5,000 in a business account, but you got $100,000 in savings, then it's creating separation. This is the LLC and this is you. If you're getting sued as a business owner, the only thing that they could touch is whatever's potentially in the business. Your personal items are your personal items. Now, if you get sued personally, they can't come in and touch the business. So you can have your commissions just stacking in your business account and not ever moving it over to your personal account so that there's less to take. So it just creates separation. That's the purpose of an LLC, but a sole proprietor and LLC has the exact same tax benefits. The LLC just has different liability features that protect you as an entrepreneur.
Got it. Well, listen, I appreciate you guys so much for this opportunity. Tons of information. My soul was touched. Again, we're going to name this one Touch His Soul. I thank you guys so much.
Yeah, absolutely, man.
Appreciate you having us.
Yeah, absolutely. Appreciate you reaching out, dude. Not a lot of people are willing to do that and stick their neck out and say, hey, can you come join me on a podcast? So, it says a lot about you. You're willing to reach out. You're willing to get uncomfortable. You're willing to do what other people aren't willing to do. And you're going to get the result other people aren't willing to, or that other people won't have. That's just the truth. You've got to be willing to do what others aren't to get what they don't have. So, and that's exactly what you're doing. So I applaud you for that.
Appreciate it so much. Appreciate it so much. I'm going to put your guys' contact information in the description, but for the people that don't want to read, can you tell them where to find you?
Yeah, they can reach out to us at Real Business Owners on Instagram, and then they can reach out to Coulter if they have credit questions at
Coulter the Credit Doc.
Coulter the Credit Doc, DOC.
Got it. Again, I appreciate you guys. When this whole thing is over, I like to take you guys out, dinner on me, and
yeah, it'll be a tax write-off too. So it's a win-win.
All right, guys, have a good one.
All right,
You
take
too,
care.
man. Take it easy.
All right.